I have a friend who's English. I'm like, don't worry, we don't hate the English. The English stay at home. Just the British. He's like, oh, well then, good. So anyways, good morning, everybody. Today is the 6th of July. It's a Monday. The Monday after the Greek vote no, the Greek no vote. And I did cover that live a little over 12 hours ago. And it was pretty calm of an open. We discussed before the market opened, the projected open price was going to be, I think it was 109.99, and it opened up at 109.84. Someone picked it out. Perfect guess. So it opened up, I don't know what that is, about 150 pips off the top. And then our focus was the fact that the market wasn't freaking out beyond that. That we had wiggle room to work our way up to fill the gap. So the video is on forex.today. Here's the link again. And you can actually, we covered this minute by minute in the section down in here. And one of the messages I gave very, very clearly is if you're going to be a bull and try to fill that gap, let it make the higher high, and then set yourself up for the higher low, and work its way up to the gap fill. Right? How many people were able to attend that event? Yeah. And it was cool, right? I mean, it wasn't a freak out moment. It was a very calm, very slow open. I even threw a binary option long on this candle here. But a very focused, very calm session. We spent an hour messing around and created this little drop in here, and then it bottomed out, and then it just did its thing. We filled our gap, which would be standard gap theory, and then the next move is have it come down, retrace, and continue mission. Same as any other gap. There's many webinars where I've taught this strategy. It goes back a million years. I think the Greeks mentioned that Forex trading strategy in the Iliad. I can't quite remember, but it's an old strategy. Well, the thing is, too early. Well, you shouldn't be too early unless you're selling right at the hardcore resistance. All right, so just, this is the psychological level of 111. It's the gap filled, and it's the daily central pivot point. So you blindly throw one down, which I don't recommend, or you wait for the lower low. Well, where's the current low? Well, the current low is in that area. So once you get a low lower than that, you sell the next retracement. So it comes up and something like this. So you shouldn't be too early in the sense that it didn't trick you or anything, right? Okay. So if you're quote unquote early, you either sold the hardcore resistance blindly, threw down a limit order or something, you didn't wait for a trigger. This is a 15-minute time frame, so maybe you got a trigger on a 5-minute. But even then, on like this chart doesn't have a lower low, so you sold an uptrend, right? See, and this is what I left the session with. It's not a downtrend until you break the lower low. And at that time, we were bearish. We were stuck in this area. What not bearish, but price action was not bullet, put it that way. So we had identified these levels, and it wasn't until we broke this level and made a high could you possibly be a bull. We talked about this is where you be the trader you want to be, where you are patient, you are disciplined, you do wait for price action to dictate your direction, not your gambling instinct. I mean, I said it as clear as that. And once it makes a high above this high, which it did, the next thing you wait for is a retracement, and then you start longing. Cool. Just watch the video. It was there. We did it minute by minute. That was the speech. Be the trader you want to be. This is a test. The market, it wasn't acting like turmoil, but this is a distressed sort of moment. The market could do anything. So this is where you stay calm and focused and trade on your terms and not on emotion. And that's what it did that. It did it. You filled the gap. Right? Long at 110, out at 111. You might have had 3 trades. Yeah, cool. Look what I'm doing now. I'm short here. Why would I be short? I made a lower low. Huh. Whale oil B. Okay, cool. So that's the only message. It was a straightforward, boring Brexit, or no vote, whatever you want to call it. Almost textbook in this case, filled the gap. Didn't have to, but that's the general strategy. And it did it in a calm, focused fashion. There was nothing, really, it was almost boring. There was nothing interesting about it. Just it filled the gap, and now maybe continuing the mission. Cool. I mean, just boring textbook stuff. So on the 4-hour, it could be down. So I have a limit going on down here. Is it really? Here, let me maybe turn it down. This is probably off. I don't know if you can even hear this anymore. Is it better? Or the same? Or okay. Cool. All right. Well, I did something. So on a 4-hour chart, we got to get lower than this 109.50, which is last week's low. And then maybe even farther down. So a 4-hour chart would probably give us a reasonable amount of room, right? because the 21's in control, one would assume it would make a lower low. So we have this, there's the gap, right? There's the retracement. That would be the assumption. Then probably up and then probably back down. Maybe I just haven't rebooted my computer in a long time, guys. So that's it. So, you know, no more longing. Now I'm shorting. Just playing it, just price action. Cool. So let's take a look at what else happened. Will ISM move the market? Well, there's no reason that it won't, because I mean, will it change market sentiment? No. Right? So there's two things going on in the world. What's going on with Greece? Question mark. And the second one is, when is the Fed raising interest rates? Question mark. Will ISM be important? Yes. But will it answer either of those questions? No. Unless it's much different than expected, one way or the other. Okay. So this is the S&P 500. Notice how we're not making a series of higher highs. Elevated oscillator here off of resistance. So we'll see what happens. Okay. See what happens. This is a hourly chart. It's been a long time since we breached the 200 EMA, isn't it? That's a very bearish situation. The market technically becomes bearish when the 21 crosses below the 55. You know, but the trend in the market shown by the 200, and the 200 is still coming down. On the hourly. But I'm a bull in this market. It doesn't have to be this month, right? Summer to cooling off period. But what does the stock market represent? It represents a 6-month outlook, 6 to 12-month outlook for the future value of all dividend payments, essentially. And that, you know, that's going to require some profits, because there's going to be no dividend to shareholders if there's no profits. So a company that is likely to show lots of profits in the near future will attract investment, will attract people will want to buy their stock so that they can get a piece of the dividend. Cool. Or something that represents a dividend, right? Stock price going up. But it would impact supply and demand for the share itself, ownership of the share. So that begs the question, well, what is likely to produce a profit? And then you'd have your income, right, minus your expenses of being in business, and then the cost of money per se. And if you're making a 5%, if you have a 5% profit margin after everything, and let's say even after taxes, but the one thing that we want to look at is things like inflation. Well, if inflation's 5% and your profit margin is 5%, well, that's probably not a good thing anymore. If your profit margin is 5% and the cost of borrowing money is 2%, then you have a reasonable profit margin and should reasonably continue your business. But if inflation's high and the Fed raises interest rates high enough, and all of a sudden the Fed funds rate is 6% and your profit margin is 5%, all of a sudden you're not actually making any money, and that's when I start to get out of the stock market. Where I believe over the next 6 to 12 months, because of the inverted yield curve, that companies are not going to be able to profit anymore. They might have income, but there's so much inflation in the market, and the Fed is starting to decrease the money supply that eventually you're going to be hurt by this process. That's where I get out. Well, we're like 10 years away from that, aren't we? I mean, if we think about it logically and intelligently, okay, maybe the market's not the healthiest in the world, but it's improving, and it's a global economy. So once Europe gets back on board, China and Japan and third world countries will also start to benefit, and then commodity currencies will start to benefit. 5 years from now, I think the world will be much healthier, and we'll be normalizing our interest rates, which is a good thing, not a bad thing. I don't think the stock market is going to come down because our global macro market is healthy enough for normalizing of interest rates. Hey, man, nothing wrong with a company borrowing the money they need to be in business and paying 2 or 3% for it. That's cheap. So really, this thing could go up for 5, 6, 7 years. I'm okay with that. Doesn't have to go up this month. And it doesn't have to go up this velocity, because obviously this was primed and pumped with quantitative easing. But I'm a buyer. And I can tell you exactly when it comes down. It just won't be for a very long time. I have a friend that lost a big chunk of money in the last crisis, and he had a money manager like everybody else, and he lost a ton of money. And he's like, well, you just don't know when these things are going to happen. I'm like, yeah, you do. I'll tell you. I said, don't worry about it. Keep your money in the stock market. I'm not his money manager, but I'll tell you 6 months to a year in advance before it happens. And if you agree, slowly start taking profit and moving into safer investments like bonds. Don't worry about it. I'll tell you at least 6 months in advance. And he's like, oh, you do that? I'm like, yeah, no problem, buddy. It's easy. So we'll talk about that then. Speaking about 6 months in advance, we predicted the 382 Fibonacci retracement in January. It's now July, right? In January, we talked about the 382. Now, we had to wait till March to get the double bottom. But once the double bottom was made, then the 382 was all lined up. So then that took 2 or 3 months to get up there, and then we got up to our 382. And now since about May, we've been waiting for it to come down. So here it is, the beginning of July, and boom, 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 significantly coming down. 1, 2, you rock! So let me throw down some I won't throw down the names, but bragging rights. I was hanging out with one of my friends over the 4th of July weekend whose company is a player in the fracking business. I got some inside information from my fracking buddy. It actually happened. But I'm like, really? So I got some inside information, and it's really interesting. Right about here, business for him picked up. He said, you know what, about 3 weeks ago, boom, things started happening again. He's like, I went through a big dry period in with my oil clients, and all of a sudden, boom! I'm like, really? So they're trying to produce again. He's like, yeah, well, they're screwed, you know, if it goes below this, you know, this $50 area. But they kicked it in for some reason just recently. Got a bunch of orders. I'm like, yeah, all right. The upside to fracking is that you can pull oil out of the ground in less than 30 days. Do you know the downside of fracking? Environment. Who cares about the environment? Come on, Alex. We're going to live on Mars, Alex. Who cares? Contamination. No, there's tons of you run out of oil quickly, guys. So like I said, the Saudi Arabians, when they want to pull oil out of a new deposit, it takes them 2 years to build the infrastructure. But once they got it all pumping oil, you can sit on it for 20 years, right? Yeah, in about 6 months, 50% of the oil is probably gone. So you're drilling. You're always drilling and drilling and drilling and drilling. You got stacked oil, and it's just, yeah. So it's fast in, fast out. So, anyways, I thought it was interesting because we've been talking about oil prices coming down for a long time, and we're peak oil is part of this, as you probably know, and some other things, and a guess, and some technicals. Now, just recently, I said I don't think it's going to go to $40 a barrel, but there's nothing in play to really raise prices higher, because if it did go higher, then a whole bunch of people would frack and just bring it, we'll just add supply. Right now, it's easier to add to supply than increase demand. The whole world's trying to increase the demand. So it's just like, so a bunch of people right in here just recently started calling my buddy up, and they're like, we're going to start drilling again. We need some stuff, and boom. Prices are already coming down. So they're, someone's doing something. Are you guys familiar with peak oil? Should I discuss that, or should I just move on? Not peak meaning like the end, like there's no more oil in the world, downhill from here. I'm not talking about that, because obviously based on our new technological revolution, we don't even need to discuss that. Okay. All right. So maybe 8 years ago, I went through like 50 years of oil data provided by the Department of Energy. And if you look over a 12-month period, so let's say I'll make this December, this January. How about that? Oh, here, hang on. Why don't I just clear this out? Let's just get a clear piece of paper here. Of course, I'm on this one, so that ain't gonna happen. Okay. Let's try this again. Reload, reload. All right. Beginning of the year, January. End of the year, December. And throughout the year, there's an ebb and flow between supply and demand. Just so it turns out that June 1st traditionally is the peak of supply. So if supply was like this, it kind of goes like, it goes, and then it goes, so we build up for the summer for people to travel. Then once we get back to work in September, it's all about the weather in the Northeast getting colder, and still a lot of the United States uses oil to heat their homes and stuff like that. So they start drawing it back down, and then we start building up inventories. This is inventories, right? And traditionally, this is when things should change, but I have a feeling that calendar chart, if you will, the shape of the supply curve is probably going to change. And so if inventories drop from here, you can kind of look at that as increase in demand, right? Someone's decided to fill any sort of gap. So if I were to draw that again, oil goes like this. And what if it stays flat now instead of coming down? You know what I mean? They just fill that demand, and we don't go through the ebb and flow. Well, what I said was to sell at the 382. Let me back out a little more. I'm assuming you guys have seen this 100 times. I mean, I've even drawn it out back in April, right? So this is the April trade, starting to pay. So you should be short around 60, 62, 63, that kind of stuff. Okay. Oh, you're saying trade it up off of here? You could, if you're a bull. Yeah. Yeah, if you're a bull. Because, like I said, when you're up here at the 382, I'm just not thinking up anymore. I'm thinking down. Like, we were long up in sort of in this area. Now it's bringing it back down. So the only thing that's going on here is we're playing the 382. Right, and the 382 predicts a 1618, and I've already gone over this 100 times, so I won't make a big thing of it. But, technically, if this was just a currency pair, let's say, mine would be this, right? A 382 Fibonacci retracement predicts a 1618, but I don't think oil's going down to $13 a barrel, do you? No. But maybe not up for a while. So it seems like I need to hang out with my buddy more and find out more about the frackers. I want to know when he's getting order, I'm probably should be shorting the heck out of oil futures. What do you think about that? Is that fair, or is that cheating? Yeah, what the frack? It's only money. Kind of both. Cool. I'll tell you what, pay me $50 and I'll let you know when I know. And then, and then you're on the gray area too. So, anyways, I think it was interesting. It didn't occur to me. I'm like, what? Why are they? I guess they want to drill, man. I guess it would suck to spend a couple of $1,000,000 and then stop everything, and you're just probably sitting there like, there's oil in the ground. I own the land. It's right there. So I only make $1,000,000 this month. I'd rather make 5 or 6 million, but beggars can't be choosers, right? You start producing oil anyways, right? Yeah, so Tim's got it too. Tim's on the water side of it. Yeah. But like in the last 2 weeks, but just notice this, guys. Boom, boom, boom. How dramatic. So like, let's say this is a average weekly range. Okay. Okay. A couple of things. It's a full week for sure. It's gapping and very, very sort of, how you say in English, very straight down. Also, the slope's kind of interesting, right? Like a week is typically like this. Right? Versus, it's steeper. I don't know. Now I guess I don't know. I'll just say it looks like it's moving faster in the direction that we predict. Like the velocity of it is picking up, right? Well, Igor brings up this idea, oil doesn't go bad. It's true, but we've already put oil in every storage container in the United States. It's full. And then they've already filled up oil tankers and parked them offshore. They're just floating there full. Someone's paying the bills just to have them float. So we got a lot of oil, man. And the economy in the United States is improving, but it's not stellar, right? So, so anyways, we're talking about oil here. Let's talk about a sort of, let's take the economy now and let's look at it a different way. I don't have a chart for it, but what would you look at? If you were the Fed, what would you look at for raising interest rates? There's inflation, right? I mean, that's why you want to raise interest rates, to directly combat inflation. Well, what creates inflation? Too much money supply and demand for money, so people are borrowing money and making investments, but by and large, buying things, right? If you're a corporation, you're going to need profit if you're going to start buying things. Or if you're a consumer, you're going to need not just a job, but income, right? Well, I think we're still in the cycle of creating jobs where everyone that's wanted a job, like reasonably, over the last 4 or 5 years has probably got one. The economy has been adding more than 200,000 jobs every month for years and years, right? And then you get your long-term unemployment, like people that just dropped out of even being counted in the NFP, or weekly unemployed. They've been unemployed for so long that they're not even counted. Well, some of those guys are coming back now, right? Well, put it this way. If you haven't worked for a while, so let's say you look for a year to get a job, you might accept a job, especially one that's actually kind of related to what you used to, even if it was paying you the same as what you used to make 5 or 10 years ago. And you know, you're happy to, let's say, make $100,000. You're like, well, I'm almost 50. I should be making 150 to 200, but it's a decent job and a decent company, and all right, so I make what I made, but so you take it, right? Or you haven't worked for so long that you'll take any kind of job, right? And what that does is you might get counted as being employed, but you're holding wages down. And so what we want to see as economists now, as currency traders, is wage growth, so that they spend their money. When they spend their money, profits are put around, and the money is multiplied through the banking system, and corporations start borrowing, and people start borrowing, and more money is created, and all of a sudden inflation starts picking up. So that's kind of what we're looking for now globally. And then differential between our economy here in the United States and other economies around the world, right? Our income versus other people's income, sort of like a purchasing power parity scenario. So we'll keep on that. And for oil prices to go up, we're going to need everybody's income going up, which is creating demand in all industries, which would then, let's say, attempt to draw down our supplies and be able to do it faster than we can increase our supplies. The only problem is, if you're a fracker and you want to bring up oil, you can bring it out of the ground in 30 days. You can do it faster than Saudi Arabia can open up the valves. You're like, open up valves, I'll just bring up new oil. Boom. So we'll just see if demand can outstrip supply. And because of what I said before, we don't have the inflation around the world. We don't have wage growth around the world. We have lots and lots and lots and lots of oil in supply, and we can add it on demand. Week by week, all of a sudden we can have oil. So how long will it take before demand is more powerful than supply? Holy smokes, guys. It could be a very long time before oil goes up significantly. So what I've been saying with oil is not up, not down, right? But more than up. But when it's overbought, you can sell it. Is it going to 13? No. Could it go back to 44? Yeah, sure. Could you buy it off of this area? Absolutely. That's called technical analysis. Right? Do you need to buy it daily, or could you trade a reversal pattern on a smaller time frame than a daily? What about a 15-minute chart that goes, yeah, off of support? You bet. Right? Old resistance becomes support. Yeah, good trade. But I wouldn't buy it just because of that. But is that realistically support? Oh yeah. Yep. Yep. I would watch the 50 psych level as well. All right, where's 50? 50 is right in here. So, another way of looking at it, let's just play the psych level. Come down 50, and then work its way back up. So if it does that, fine, technical trade. But is it going to go up to $70 a barrel? Well, what would create that kind of demand? And right now, I don't have an answer for that. I'm like, really? I don't see that. So maybe we're caught between 50 and 60, right? let's just say generally 50, 60 range. John says down to 50 in velocity alone. Could be. But see, what we don't know, Timmy's got a friend in the fracking business. I got a friend in the fracking business. Both are busier in the last, 2 weeks than they've been in the last 2 months. 3 months probably. 5 months probably. All of a sudden, these guys are like, boom, right now. And at the exact same time, oil starts coming down. Somebody is watching the industry even more than Tim and I are, because I don't have an ear to the ground like that. But there are traders that do, and they're saying here, increase in supply. Somebody is paying attention. Well, yeah, okay, oil prices are good, right? Well, what's going to happen is that oil is going to move out of the United States. So, like I've been training you guys all over the years, right? When you make an assumption, ask yourself immediately, who's the winner, who's the loser? So who's the winner if there's suddenly more oil in the United States than even the United States needs? Where's it going to go? By the way, it's the same answer I gave when Russia attacked Crimea. I said the CIA was going to punish Russia. Uh-huh. Where does Western Europe get their oil? Yeah. We're kind of pissed off at them, right? Pardon my French? No, they get it from Russia. That's why the Crimea is so important. That's why. So anyways, we need to, or Western Europe, our allies, need to get it from somewhere else. Well, why not Canada? That's what the Keystone Pipeline was about, guys. It was selling Canadian oil to Western Europe to screw the Russians. Yeah. Well, all of a sudden now, in the United States doesn't even need Canadian oil anymore. We're just like, well, we'll sell them American fracking oil. So anyways, the winner here is going to be Europe. The only problem is they're trying to increase inflation, right? So it's going to take a while. So what remember when inflation plummeted in the United Kingdom? And Carney said, don't worry about it. Don't worry about it. Don't worry about it. Don't worry about it. Well, see, all of that's going to be priced in pretty soon because inflation is a year-over-year statistic, isn't it? And so once oil stays low, remember it was at 110. So as long as it's 40 or 50 or $60, inflation's going to be low for a while, but then other things will pick up as it benefits from low stable oil. And Russia, or let's say Western Europe now, could have cheaper U.S. oil from a stronger ally, and that'll depress inflation in Europe for a while, but eventually will be priced in, and then they'll have longer-term benefits from more stable and lower oil prices. And then inflation will kick in healthier, but I think it'll take a lot longer. Let's say it'll add at least an extra year to the process of creating inflation in Europe. But can you imagine how about a 4-year period of prosperity and low inflation in Europe? Kind of sounds like what happened in the United States. Cool. And I think that will continue here in the United States as well. I think we'll have extremely low levels of inflation for a reasonable amount of time. And I don't care if they normalize interest rates. If the If the Fed funds rate goes to 3%, it's still a joke. And how long is it going to take the Fed to raise interest rates to 3%, guys? Yeah, but how long? 3 years? I mean, 3 years from now? I mean, we're talking maybe in 2020 we'll have 4% interest rates. I mean, 4% interest rates is unbelievably cheap. I mean, it's good. I mean, it's awesome. So sell the hell out of bonds. I already cornered the market on European stocks. I was sold last year. So anyways, sell bonds, man. Yeah, Steven's like, it could go up. My neighbor, when I first moved to Georgia, I was getting to know him, and I told him how I timed my mortgage specifically to the day that the Fed was meeting. and he's like, yeah, you know, and we're talking about it, and he's like, my first house, he said, I got this deal on my first mortgage ever, and I was bragging to all my friends what awesome deal I got on my mortgage. And he said it was like 18%, and all his buddies had like 20% mortgages. That was his first house. I'm like, oh my God. I said, yeah, but so here we are, you know, back then, you know, interest rates on a mortgage were like, I don't know, 5%, right? I said, yeah, but back in 1980, you didn't take 20 years of your salary, or 10 years of your salary, right? Like, let's say you make $100,000 a year and buy a $1 million house. People just didn't do that, right? 10-year salary. People just didn't do that. So that's why maybe interest rates were high. I don't know. Interest rates are so high, prices were low. So now 5% mortgage historically is dirt cheap, but you're going to have every idiot on the planet that has credit. So every idiot that can afford it can borrow money for cheap. It doesn't matter to them. They'll probably default anyway, so who cares? And then they can buy a house, which drives up prices because every idiot on the planet can get a loan for it, right? So prices go up 1,000%. Well, if interest rates are 18%, who can afford to get a mortgage? Somebody with a solid job. But prices are going to be low. So anyways, there's always a consequence. So yeah, so anyways, I think Western Europe will benefit from the lower oil. Gold just caught up. Hard to even see it, right? Just now, if you are a gold bull, this might be a little interesting area. It's a pivot, and you got a oscillator cycle, and it did make a higher high. It could be a higher low scenario. M2 to M4 would be your weak if you're a bull, right? I think if you're a bull, you'd have to be prepared for this. And the target really is way up here, 1,200 basically, right? What do you think, guys? Do you think all the politics on TV this week in regards to Greece, do you think that'll drive up gold prices? It's the end of the world as we know it. No? You don't think it'll freak people out? Come on, stay short. Well, it seems to me if Greece was getting ready to print drachma, if I was Greek, I'd like to buy some gold, man. What do you do in a situation of hyperinflation? You buy a hard asset like real estate or gold. That's what the conundrum was about the big giant financial crisis that we had in 2007, 2008. The real problem was that it was real estate related, and typically you would buy gold or real estate in a severe market downturn. Problem is, those that's scary. What's my opinion about DAX? You should have bought it when quantitative easing began. Now why would I just wouldn't be that? I mean, I don't know. I did a bang about it when it happened. I mean, that's the whole point of quantitative easing, right? It's designed to increase asset prices. So beyond that, I don't know. I think there's if I was in the equity business, I would probably be buying a lot of European stock, find companies, maybe not Germany, but I think I would have started with Germany, and then I would have moved out to other countries in the Eurozone that would benefit from periods of slow growth and low inflation. There could be a lot of things that could benefit from that, especially, if you're looking at a horizon of, 15 to 20 years. Well, you got to go with the wave of quantitative easing, right? So Draghi just recently changed his collateral. You probably don't know what that means. It means it's a small change to prepare those that are in the know. And I have, who's in the know? Bing, bing, bing. He's preparing to say that he wants to do quantitative easing someday. So you should be preparing back in, is what I'm saying. And listen to Draghi. Is he going to do that in the middle of summer? No. So don't worry about it today. But we've just had a massive rally based on nothing more than quantitative easing, and we've had a 50% retracement. Well, what is it that you're waiting for? So I have this, as you can see, I drew this, 3 weeks ago? So, we're working our way down to the 618. Okay. It seems like the money basically flows from Germany to Greece, right? So that's why I was saying, there might be a better place to get a more distressed asset. Yeah, Tim, I was wondering about that. Like, how long does it take to get a physical currency? Now, the vast majority of money is in the banking system. That's where money's created. We're not actually printing, right? You always hear in the media that the Fed will just print money. Well, the Fed doesn't print money. The Treasury prints money. Always get that wrong. The Fed doesn't have printing presses. Well, the Fed will just turn the printing presses on. They don't have any printing presses. So these little things make me irritated, right? But they can increase the money supply. They just don't do it with printing presses. So yeah, you can just one day say, "Hi, I'm the Central Bank of Greece, and I'm going to take every single euro that you have in the bank, and I'm going to immediately convert it 10 to 1. So if you had $1 million euro, you now have 10 million drachma, and be done with it. And what you just did is devalued your currency, right? Ta-da! That's easy. They can do that. They can flip a switch. But actually printing the money, I was laughing about it yesterday, like who would loan them the money so that they would have enough money to print drachma? I mean, it's not cheap. Right? Does it cost 25 cents to make a nickel? Does anybody know? Maybe not 25 cents, but maybe it costs 7 cents to make a nickel. Well, you don't want to make a lot of nickels in that case, right? All right, so the message here, I should get the message out. The message here is that there was not craziness based on this no vote. The market was very calm, very smart and intelligent. It moved exactly the way it's supposed to move. And I'm very thankful for that because I don't like, the chaos. This is the actual open right there. Look at that. This is down again. Look where it bounced. Weekly S2. Worked its way up. Closed the gap. Nice. Very, 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 very nice. I've trained you guys many times on how to trade gaps. And it behaved exactly. I honestly didn't think it would behave textbook. My short guys. Oh, look, I missed that one by no. But let me move this. All right, good. But I'm thankful how calm it was. Certainly didn't have to be calm. And it makes me feel good. Like in this, it seems like the market actually prepared. It had tons of time to do it, but it doesn't mean they did it. But the market did stay calm and did stay focused. And I hope you took the opportunity. So like, on the session earlier, right, at the open that I did live, that's what I told everybody to do, right? Let's stay focused. This is an opportunity to be the trader you want to be. Look at the market, guys, right here. See it double bottoming? Here it is turning around. And the message was, trade it the way you want to trade it. If you want to be a patient, disciplined trader, and you want to fill the gap, don't just buy at the bottom. Let it make a higher high, higher low, and then use price action the rest of the day. See? To get any clearer than that, guys? Look at that. We're not even above 110 when I'm drawing this. This is like 109.80. It went to 111. Look. This, can you, hopefully you can still see it, is right here. And then I say, follow the arrow here. Up, down, up. Can I get a hallelujah? Hallelujah! Can I get an amen, brother? Can I get a what? What? Yeah. Woot. Thank you, Zeal. But the news to use is that the market behaved as it was supposed to. That was only 150 pip move, which is nothing in my experience. And I was very happy that when it opened that low, that it didn't like freak out and drop another 100 pips. It really could have, but it didn't. And it was pretty slow. That hour was very slow. But it bottomed out and it did its thing. And then the whole end result of it is it filled the gap. It did it in a couple of waves. It didn't do it in crazy volatility. And then we brought it all the way back down. And then I shorted the next low. And that's up money. And it's just easy, calm, and peaceful. And it's just like Zen pips, right? Boom. They're happy pips, guys. They're happy pips. They're not angry pips. They're not sad pips. They're just happy pips. Makes me feel good. So here we are around the 110. If I wasn't coaching with you guys, I probably would have taken that profit, even though my stop's lower, just time of day and stuff. So now we got to prepare for the stock market open. And I had that extra 20 pips. But you guys keep me sharp and keep me focused, so I don't mind being here an hour or so every day. So I will take this video and I'll put it on forex.today. It usually takes about an hour, that whole process. But as you can see, the video is there from the Sunday Open. So if you'd like to watch that, feel free. It's available right on the homepage. Let me go there. Here it is. Forex trading session, right? Greek Nova. And so I'll see you. I'll see you tomorrow. Will you be here tomorrow? Yeah. So I'm sort of, as you can hear in my tone of voice and stuff, I'm kind of in summer mode. So I'm really relaxed. Yesterday I had my cell phone out and I was listening to the Greek election or referendum in real time. I'm like, I told my wife, I'm like, I'm sure this is what every American does on their long weekend. Listen to European referendums in real time. I mean, what else? What else would they be doing? And I'm smoking a fabulous cigar, a vintage Romeo y Julieta, puffing away on that thing, and I'm reading about balance of payment and current account of various countries, just having a good old time. And then I said, you know what? When I heard the no vote was coming out, I need to hang out with my team. I want to watch that open with my team. So I sent out an email. Hopefully people got it. And it's really cool not to be alone like that, isn't it? So anyways, peace on earth. May the pips be with you. May your profits be above average. What time? We started 15 minutes before the market opened. 4:45 p.m. Eastern Time on Sunday. You know what, Kareem? That should be a good cigar, whether you prefer something else or not. It burned terribly. It burned like I was standing on the the very front of the Titanic, right, as it's sinking into the water. Just amazing. It was just the lightest of breeze, but it burned very very poorly. One side was was burned up, and the other was not. Just terrible. But oh well. So thanks, guys. I'll see you tomorrow. Maybe leave a comment for the video. That'd be cool. Appreciate it. And I'll see you tomorrow. Cheers.